Hello and welcome. You're watching First Stick here on News 9, where we break down the morning action on the D Street. I am Suyash Maheshwari, and with me in the studio is my friend and colleague Amit Ranjan. As always, let's begin with how the global markets are placed. Amit, over to you.
All in the green today. Dow Jones closed up 0.68%, S&P 500 closed 0.59% up, Nasdaq closed in the positive 0.66%. Coming to the European markets, the stocks 600 closed at in the positive at 0.36%. Even Hang Seng, which had been in the red for some time, is up today 1% in the morning, and Nikkei is up 1.65%. So things looking up after a few days of most of the markets being in the red.
All right, and Indian markets also, Amit, have in fact scaled a new record high in the opening trade, with Nifty opening above the 21,500 mark, the level it has been struggling with in the last 2-3 sessions for the very first time today. And as you can see on your screen, as of 9:30 a.m., we are building onto those early morning gains, the gap up gains. Nifty 50 as of 9:30 a.m. this morning is up over 0.5% at 21,570 mark. The intraday high, which is also the new record high for the index, sits at around 21,593 mark. Amit, experts that we have been talking to have indicated that 21,600 is a very critical level for the index, and that perhaps will act as a resistance going forward. Even Sensex has scaled a new record high. The index is up almost over 0.5% in fact, and has scaled 21,800 sort of levels for the very first time. Now moving towards the 72,000 marks, just about 140 points shy of it. The mid cap and the small cap index, which were showing some signs of exhaustion, especially the mid cap index, that has also scaled a new record high, and it has been scaling a new record high pretty much on the daily basis, has been a big outperformer throughout the year. But we had seen some bit of mutedness set in this month, but the mid cap index is also participating in today's run up. It's up almost 0.64% as of 9:30 a.m. and sits at around 45,800 mark, whereas the Nifty small cap 100 index opened above the 15,000 levels for the second straight session. It's holding on to those gains, has hit a record high of about 15,100 sort of levels or so in the morning trade. And India VIX, Amit, that is something that the market participants will be concerned about. That has crossed above the 14 levels. It's up about 1.3% this morning, and a level of 14, we have not seen these sort of levels since late March of this year. So perhaps we need to keep an eye out for that. But then again, it's a weekly expiry for the Nifty banking pack. We should expect some volatility to continue in the market. But with that, let's also bring on board Mr. Akshay Bhagwat, Senior Vice President at JM Financial. Hello, sir. Welcome to the show. Thank you for joining us here at First Stick. Now, in the last 3 sessions, Nifty had been struggling to, break past that 21,500 sort of levels. We have finally opened significantly above that. Does that open doors for 22K by year's end?
Good morning, Suyash. Yes, so the only point here is that the rally is unstoppable in the Nifty. Now, if you look at the broader chart structure, there were 2-3 days of a slight consolidative price action, a minor correction just to call it, but broadly, that doesn't change the price structure. If you look at the placement in the options data in the futures and options segment, clearly the call writers are now moving away to far off strikes at 22,000. So clearly the indications are that the markets are preparing themselves for a surprising move, which can at the best extend till 22,000 by this December expiry itself. Tomorrow being the weekly expiry for the Nifty index, the put writers are positioning themselves at the strike of 21,500. So broadly, it's a very strong technical structure, highly overbought, but it's a momentum driven rally, and in such rallies, it's best to avoid the overbought parameters and just stay with the flow. So maintaining a positive view, possible targets which I look for is 22,000 in the Nifty by this year end.
All right, 22,000 is on the cards, but also want to talk about the Nifty banking index. Now, that had been a laggard for the majority of the year, has finally started participating in the rally. It has moved up by about 8%, over 8% in fact in December alone. Now, we have not seen these kinds of returns in a year, let alone a month. But the index had been consolidating in the last 2-3 sessions. We have finally opened above 48,000, which was the ceiling. What's the support and resistance for the banking pack, Akshay?
I completely concur with you on this, Suyash. I mean, it's been an amazing move, a surprising move, which has in fact caught the call writers, you can say, by surprise, because, at the wrong side of the markets, it's the call writers who have got stuck in this rally, which has extended for the past couple of months. As I see the bank index again here, today being the weekly expiry for the bank index, there is a lot of put writing which is positioned at the strike of 48,000 for today's weekly expiry. So 47,950 to 48,000 would be a very strong support base for day trading. Broadly, if you were to look at the support for the Bank Nifty index from the short term perspective, 47,500 is a support. Until we are above this support, there is no challenge for the trend in the bank index. Clearly, 48,000 is going to be broken past, and we possibly should head for the upside resistance levels, which can extend till around 48,250 or 48,300 if it's intraday expiry. So a positive view I continue to maintain on the bank index. There is no disturbing activities in terms of a trend change as it currently reads right now.
All right.
Good morning, Akshay. I'll drive your attention to Reliance Industries. Now, you spoke about the rally. It is the only stock, it seems, that is heavyweight stock that is participating in the rally. Over 10% up the last 1 month. In the last 5 days, up 6% in profits. Today, as we speak, it is over 1% up. What do you make of this stock? Is the rally going to continue a long time, or have we topped out?
Good morning, Amit. Well, if you look at the way Reliance has been, this stock has been a strong outperformer in the last couple of months. Week on week, it's been the 5th or 6th consecutive week where positive gains have been registered. Now, from a technical perspective, it is near a resistance for the December series. 2600 is one level where significant placement is seen in call writing. Also, just for a reminder that these were the levels of 2600 which we saw in August last year, and from there we had seen a sizable correction. So my sense is there can be some profit booking for the short term at the levels of 2600. So I would suggest book profits if you are trading in Reliance. If you still hold a position from a portfolio perspective, then maybe in January still you can expect a run-up rally till 2650 at the best. So portfolio traders continue to hold. Short-term traders just who are looking from the December month's expiry perspective, 2600 is the level to book out and just stay light ahead of the expiry.
Akshay, what's your view on Nestle India now? That stock has moved up quite significantly, moved up by about 5% or so yesterday to hit a record high after the company fixed a record date for the stock split. Now, if you go back in October, they had approved, the board had approved the stock split in the ratio of 1:10, wherein one equity share of face value ₹10 will be divided into 10 equity shares each. Going forward after the stock split. Now, do you expect this rally to continue, especially after the stock split? Can we expect a liquidity-driven rally?
Yeah, absolutely. A liquidity-driven rally can be on the cards after the news of stock split came on yesterday in Nestle. If you look at the way the markets are moving, yesterday it was the FMCG pack which saw the flow of money in this sector. So the money has been chasing sectors day on day, and from yesterday it's the FMCG pack which has started to look absolutely fine on the charts. Here, Nestle is undoubtedly trading at lifetime highs. The chart structure is absolutely fine. The momentum-driven rally yesterday. So the support zone is 25,200 as I currently see it. And overall, this target might be extend to around 26,000 or 27,000 at the best. I see the targets extending for Nestle. But I believe from here on, you should only be considering this more of a trading target in Nestle. Positionally, it's highly overbought. I would just like to it before committing fresh funds from a medium-term perspective in the stock at the given juncture.
Akshay, also wanted to pick your brains on Varun Beverage. Now, the stock has moved up about 20% or so this morning after the news came out that it's going to acquire Bevco, which is a South African-based beverage company. And what a phenomenal stock this has been for investors. The kind of returns we have seen in the past few years. To put the numbers into context, in the last 5 years, the stock has given returns of about 1100%. Even this year, it's en route to become a multi-bagger. What's your view on Varun Beverage? is that a stock one can add for long-term gains?
11% up to start the day. What else can you ask for if you are invested in the stock? Well, an absolute berserk moment, I may call it, the way the stock has performed in the last few months. And from here, if you hold the stock, I would still recommend you continue to hold this. This news is on, so maybe you might see some bit of profit booking here and there, but that does not change the broader outlook or the chart structure. I believe there is still more upside to go. 1425, 1475. These are the possible targets I see from a slightly medium-term view with a time horizon of 1.5 to 2 months. Support base is 1200 from where we have seen the gap up opening today. And if one needs to get into the stock, you're thinking about buying fresh in this stock, I would suggest let's wait for some bit of dip. Ideally, 141250 is the level which gives me comfort to take a re-entry into the stock with a stop loss below 1200, targeting around 1425 to 1430 from a medium-term perspective.
Okay, Akshay, that was about Varun. What would you recommend, the stocks that you would recommend for the investors today?
Yeah, from short-term trading, I have a few names here. Firstly, the stock is Aurobindo Pharma from the pharma space. Here, I'm anticipating a possible breakout, which may happen very soon. The stock is lining up for a possible break above 1060. So you may see the momentum strongly surging once this breakout is done. So buy Aurobindo Pharma, keep a target of around 1062 with a stop loss of 1018. Second trade would be in Kotak Bank. Banking space is in the limelight. Most of the banks are faring well, and Kotak Bank is one stock, the technical setup of which promises a target of 1885 and a stop loss of 1834. Third stock would be an ITC, again a defensive bet, but at the overheated levels of the market, I believe pharma and FMCG would be some of the stocks you need to have in your portfolio or your trading list. So ITC, another stock which is possible support in the making, launching for the next round of momentum. Derivative parameters are absolutely strong. So buy ITC for target of 474 with a stop loss of 445. Next would be Havells. Havells has an absolutely strong chart structure, basing out formation seen around 1400 odd levels, again setting up for a launch. Target around 1405 with a stop loss of 1354. And the last recommendation would be State Bank, which has seen a strong breakout of 3-4 trading sessions back at the levels of 630, easily heading for 700 plus going ahead into the month of January. But from a trading perspective for the December series, you can easily anticipate targets till 681 and keep a stop of 643 on this trade.
All right, that's Mr. Akshay Bhagwat for you. So always a pleasure speaking to you. Thank you for joining us here on News 9.
Thank you.
But with that, let's also take a short commercial break. On the other side, we'll be joined by Mr. Kranti Bhatini of Wealth Mill Security. So stay tuned for that.
तो जब हम करेंगे तो पता लग ही जाएगा. सलमान खान का करेंगे, मारेंगे यहीं जोधपुर में मारेंगे तो पता लग जाएगा.
This is someone who is sitting inside our jails and is still very obviously and openly running and possibly the largest organized criminal operation in the country.
Student organization of Punjab University में सोपूगा acting president type भी रहा है.
He was a troublemaker, getting into fights with people, not coming to the class.
As on date, it appears that Lawrence gang is the most important, the prominent gang. Gangs here in Punjab, they are intimidated.
Today he is India's most dangerous gangster, and India's prisons are apparently no bar to how Bishnoi runs India's largest criminal empire.
News is now content. Just stream it. Download the world's first news OTT, News 9 Plus, ahead of the curve.
Welcome back. You're watching First Stick here on News 9, where we bring to you the morning action on the D Street. Now, Indian markets are holding on to the morning gains. Nifty, as we speak, is still up about 0.5% or so. at 21,570 sort of levels, whereas Sensex is also up about 400 points, in fact over 400 points, moving towards that 71,900 sort of levels. The rally has extended to the broader markets as well. Both mid-cap and the small-cap indices are also trading higher. In fact, they're outperforming the headliners. As you can see on your screen, Nifty mid-cap 100 as of 10 a.m. this morning was up 0.76% at 45,858 mark. The small-cap index is sitting well above the 15,000 level, which it had been struggling with for the last 2-3 sessions. India VIX, that becomes a problem for the bulls. That is India VIX is above 14 levels. Again, we have not seen these kinds of levels since March of this year. But then again, it's weekly expiry for the banking pack, and tomorrow will be the weekly expiry for Nifty 50. So perhaps we can expect some bit of a volatility to continue moving forward for the next few sessions. But Amit, banks are back in a big way, and what coincides with their revival is the return of FIIs, who have pumped in almost 40,000 crores since the last week of November, isn't it?
Yeah, foreign portfolio investors are queuing up to invest back big in Indian banks. The trend is not restricted to foreign portfolio investors. Mutual funds have increased their stake in Indian banks in the year 2023. And what's wrong with that? Because HDFC Bank, which is leading the pack, posted a 51% jump in net profits in the second quarter of 2023 at 15,976 crores. SBI, which has been little muted, the stock which has been little muted, even posted a net profit of 14,330 crores in the second quarter. ICICI Bank, 10,261 crores. Bank of Baroda, despite all the problems, 4,253 crores. FPIs too have caught on to the trend, and HDFC Bank is the one that is leading the foreign portfolio investment jump. 52.11% jump in stake for the year 2023, FY 2024. In HDFC Bank, it was 32.08% the last year, FY 2023. Bank of Baroda, the FPI stake has jumped 12.39%, up from 9.87% the last financial year. IDFC Bank, 23.32%, up from 12.2%. Big jump there. So it has been a big jump, and even when I look at the stock prices of these banks, HDFC Bank in the last 1 month has jumped almost 11% in profits. ICICI Bank, again 10.5%, 10.35%.
So the giants have woken up now finally.
Yeah, IDFC First Bank, which gave the biggest jump in FPIs, 7.52%, not the biggest, one of the biggest. SBI, despite being muted in the change in the FPI portfolio in them, the stock has jumped 16.5%. Canada 12.09%. Kotak Mahindra Bank, little muted, 4.75%. IndusInd Bank at 4.41%. So banks are basically the big attraction right now, whether it is for mutual funds or it is for foreign portfolio investors.
All right, let's also take this conversation with Mr. Kranti Batini of Wealth Mill Securities. Now, Mr. Kranti, banks have finally woken up from their slumber. The banking index, which was a big laggard, for the majority of the year, has given returns of about 8%. Now, we have not seen these kind of returns for full year, let alone a month. Now, do you expect this outperformance to continue, given that FIIs are back and back with a bang?
Yeah, Shaz, the outperformance can be continued. The main reason is for FPIs, Indian banking and financial services is one of the main key theme for Indian markets are concerned. It offers a very good franchising model. It offers a strong growth prospects for Indian economy. If anyone want to have a pie of India's growth story, means it reflects in the banking and financial services. We have a great franchising models, as you are mentioning, like HDFC Bank, ICICI Bank. These are the business. They have a strong, robust business models in India. For that matter, State Bank of India also. So banks are perceived to be the growth centers of any economy. That's the reason when the FPIs comes vigorously into the Indian markets, the first and foremost sector to consider is banking and financial services. And these are large cap stocks. That's the large cap stocks, and and we can see the outperformance in these banking and financial services stocks as the FIs are coming back to the Indian markets.
Batini, now amongst these banks, the FPI portfolio increase has been maximum in two major banks. One is HDFC, the other one is IDFC First Bank. With respect to certain banks, it has actually gone down despite their performance, that is ICICI Bank. What do you make of these two banks? Are these the ones that investors should look at more closely now, especially IDFC Bank, which has been under the radar, not in the same league as the others?
Yeah, IDFC Bank is concerned. It's now budding emerging bank in the mid-sized segment. They're quite aggressive in terms of their loan book, in terms of their cards business, consumer lending is concerned. So some kind of interest has been shown by the FPIs in terms of buying these banks in the past 6 months. And the big boy from India, always HDFC Bank is the all-time favorite for FPIs all these years. Now they are showing the keenness because of the relative valuations of HDFC Bank is concerned. We can see some kind of activity. But just for the matter of fact, just to ponder, when the FPIs have been going back out of India in the past 1.5 years, what we can see is the quantum of FPI holdings have came down drastically. Names like HDFC Bank and all. So now we can see a complete reversal as the growth is coming back and FPIs have been focused on Indian markets. This is the reason we can see some kind of heightened activity in the past fortnight, from the past fortnight and past 20 trading sessions in these banks.
Right, Kranti, as we speak, DOMS Industries has made a stellar debut on the bourses, listing at rupees 1400 per share on both NSE and BSE. Now, this is a 77% premium compared to the IPO price of about 790 rupees a share, and it's also ahead of the expectation. I think the market was pegging the listing premium to be of about 60 to 65%. We have opened about 77% higher. What's your advice to investors about DOMS Industries? Should they, at least the ones who got the allotment, should they hold on to the stock for long-term gains or perhaps book some profits now?
So if the investors invested for the stock just for the listing gains, 77% in just few minutes after listing is fabulous gains. So if I am the investor, I would like to tend to take some profit from the table. And if I'm a long-term investor also, still 77% is a stellar listing gains. I tend to take some profit from the table, and we'll see the next quarterly results, and we'll take the review of the earnings and take a call for a serious long-term investment is concerned. But at this market juncture, taking some profits from the table is the right thing to do, in my opinion.
And what about investors who are not allotted shares? If they are looking to enter this stock, should they wait, maybe take some positions, build on to, positions in a staggered manner?
There is no need to chase these stocks at this point of time, Suyash. Just wait for a while. There will be a cooling off. That's what we witnessed in the recent IPOs, even with the fact with Tata Technologies also. Post-listing couple of days, there is a stellar rally and there is a cool off period. So we can see completely reversal for names like Irida also. There was a cool off and from there the stock picked up. So clients need to be, investors need to be on their toes, just observing the developments, what kind of sector they represent and what is the relative valuations and market caps of these companies. These are extremely crucial. But Suyash, next couple of quarters for all these stellar listing IPOs, understanding their business models and understanding their relative returns is extremely crucial for the investors. They can't just buy these stocks and be in a sleeping mode. One need to track actually the quarterly results of these companies and cash flows of these companies.
All right. And, Kranti, talking about markets being at all-time high, What's the mindset of the clients that you have been talking to? You know, are they using these rallies to build a long-term portfolio, something that they'll hold on to for the next 5-10 years, or are they using it to book profits?
It's a mixed share. There are people who are booking profit. There are new investors who are entering at these levels also. So it's a mixed bag at this point of time. That's what the beauty of this bull market at this point of time. But one thing, Shreyash, in these markets, what we can see is the sentiment is completely positive and the liquidity is enormous in this ample liquidity is there, enormous liquidity is there in these markets. That's what fueling the market at this point of time. After reaching 21,500 levels also, we can see follow-on buying that's taking place in the markets at this point of time.
All right. Now, Kranti, another stock has listed. In fact, India Shelter has listed at a premium of about 26% at 620 rupees per share versus the issue price of 493. Any view on India Shelter?
So yeah, you have a very busy job to cover all these IPOs and telecast at this point of time. That kind of exuberance, what we are witnessing in these IPOs right now. So yes, what I will do can see is just wait for the company's prices to settle down some point of time, and many of the investors who are coming in these IPOs are predominantly looking for listing gains. So once the cool off is done, we have welcomed these new business models. There is ample paper, new business models are coming to the markets. I'll wait for any IPO that lists on the exchanges. We try to understand the business model first, and we try to gauge at least 1-2 quarter results post IPO to take a serious investment decision here. Till the time, all these positions can be trading positions for us, and I believe in most of the cases for the investors also.
Mr. Batini, here's a story that we have been covering. Even yesterday we spoke about it. The Houthi militants, after their attacks on the ship, British Petroleum became the first oil company to halt all the routes via the Suez Canal, and they are going all around. Brent crude is up at over $79. WTI is up almost 1% at 73. Do you expect oil prices to continue to rise, or is it just a blip?
What I believe is it's just a blip for a shorter period of time. We expect the oil prices to consolidate. We can expect the oil prices. It might go up in next couple of weeks, but on a medium to long-term view, we expect the oil prices to consolidate, and we can expect the oil prices coming to the range of $80 per barrel. This is what the level we are expecting at this point of time. But what we can see is it is a temporary blip, but we need to see how the developments are going to take place. At least it might take, we can see some kind of sudden spikes in oil for the next at least a fortnight. From there onwards, we can see some kind of consolidation in the oil prices. But right now, what we can see is we can expect some kind of heightened activity with respect to oil prices are concerned in a short term to medium term.
All right, that's the view on oil. But Kranti, before we let you go, what would be your advice for retail investors stepping into 2024? Because we have a lot of binary events. The biggest, of course, being the general elections of 2024. And then we have a lot of positives coming in by the name of rate cuts from both India and US. So what would be your advice to retail investors for the year 2024?
Yeah, sure, you nailed it. Okay, the biggest event that we are looking forward in 2024 is the general elections and also the central bank movements. How the central banks are going to make their efforts to control inflation or give a chance to enormous chance to growth. That is in terms of the rate cuts are concerned. So these are the two major events we look forward to for 2024. But also have an eye on the oil prices. That also joker in the pack, extremely important for an economy like India. What we can sense Shreyas, going forward for 2024 is how the earnings revival, that is extremely crucial. We have witnessed a fabulous rally in the market. At the same point of time, the corporate earning revival, the earnings growth also, we need to witness in the company earnings. That's where we need to see. We have a beautiful set of numbers. We can see the tax collection data, GST data, all set of the growth, everything is fantastic. That has to translate ultimately into the balance sheet, that is the profitability, corporate profitability. That is extremely crucial. We need to gauge in 2024.
Right. All right, that's Mr. Kranti Bhatini for you, sir. Always a pleasure talking to you here, and thank you for joining us here on News.
Thank you, both of you. It's always my pleasure to share my views.
Thank you.
But with that, it's a wrap on this edition of First Take. But stay tuned with us as we'll be back with Business Plus on the other side.